Look at your screen right now. If you own a single ounce of silver or gold, you are in immediate danger. Today is June 23rd, and Wall Street just pulled the trigger on a massive trap. Retail investors are panicking. They are dumping their metal, but they are walking right into an ambush. Welcome back to John Ag Briefing. Today, we expose the exact data the big banks don't want you to see. Do not trade today until you watch this video to the end. Let's look at the hard facts. Right now, gold is struggling near $4,100. Silver is sliding down near $64 an ounce. Over the last month, silver took a massive 20% hit. To the average person, it looks like a total collapse. It looks like the party is over, but here is what they are hiding from you. Look at the chart from 1 year ago. Silver was trading at $36. Even with this drop, silver is up over 74% this year. This is not a collapse. This is a manufactured shakeout. The big institutions are creating a fake panic to steal your physical metal at a discount. Why June 23rd? Why today? The Federal Reserve is sending mixed signals. Inflation fears are high. The US dollar is fluctuating. In times like this, big funds need liquidity. They use a tactic called a bull trap. First, they let the price tick up slightly to make you feel safe. They want you to buy more. Then, they slam the paper market with short contracts. The price drops fast. You get scared. You sell your physical coins to an online dealer or a local shop. And guess who buys them? The exact same institutions that crashed the price. It happens every single cycle, and thousands of American investors fall for it every time. To truly understand this trap, we must look at how the paper market operates. For every single ounce of physical silver sitting in a vault, there are hundreds of ounces of paper silver traded on the stock exchange. Wall Street big banks print these paper contracts out of thin air. They use them to flood the market whenever the physical price starts to rise too fast. It is a controlled game. When they want to buy cheap silver, they dump millions of paper ounces in a matter of minutes, usually in the middle of the night when trading volume is low. This triggers automatic stop losses for retail traders. The price plummets, panic spreads, and the banks buy up the real physical silver at rock bottom prices. Let's look at the physical vaults themselves, specifically the COMEX in New York and the LBMA in London. The data shows that registered silver inventories, the actual metal available for delivery, have been draining at an alarming rate for the past few years. Millions of ounces are leaving Western vaults and moving to Eastern nations. The physical supply is tight, yet the paper price is dropping. This disconnect is the ultimate proof of a trap. They are manipulating the paper price down to hide the fact that the world is running out of physical silver. Now, let's look at the bigger economic picture that the mainstream media refuses to cover. The United States national debt is growing by billions of dollars every single day. This is not sustainable. The value of the paper dollar is shrinking, even if it looks strong on a temporary chart. When the government prints more money, your purchasing power drops. Wall Street knows this. They understand that paper wealth can vanish overnight. That is why they want your physical assets. They want you to hold their depreciating paper cash while they lock away the real gold and silver in their vaults. Look at what is happening globally with the BRICS nations. Countries like Russia, China, India, and Brazil are moving away from the US dollar. They are aggressively buying up gold at a record-shattering pace. The Shanghai Gold Exchange is consistently trading at a premium compared to Western markets. This means physical buyers in Asia are willing to pay more for gold and silver than what the Western paper markets claim they are worth. Rumors are growing that a new gold-backed currency is coming to challenge the global financial system. If the US dollar loses its status as the world's reserve currency, what do you think happens to physical gold and silver? The demand will skyrocket, and the prices we see today at $64 for silver will look like an absolute joke. The global elite are preparing for a massive shift, but they want the public to remain blind. Let's talk about the specific relationship between gold and silver known as the gold to silver ratio. Historically, this ratio tells us which metal is undervalued. Right now, the ratio is severely stretched. This means silver is incredibly cheap compared to gold. In a true commodities bull market, silver always plays catch-up, and when it moves much faster and harder than gold. The current drop to $64 is a temporary anomaly. It is a rubber band being pulled back as tightly as possible. When that rubber band snaps, the upward momentum will catch everyone by surprise. Furthermore, we must look at the structural deficit in silver mining. Silver is unique because it is both a precious monetary metal and an indispensable industrial commodity. Unlike gold, which is mostly hoarded in vaults, silver is consumed. It is used in solar panels, electric vehicles, 5G technology, military guidance systems, and medical equipment. Green energy mandates in the US and Europe are forcing industries to use more silver than ever before. Yet, mining companies cannot just ramp up production overnight. Over 70% of silver is produced as a byproduct of mining copper, lead, and zinc. If global industrial production slows down, Copper mines close, which means silver supply drops even further. We are looking at a permanent supply crunch. If silver and gold are dead, why are central banks still hoarding metal? Why are global insiders quiet? Smart money does not care about daily paper charts. They look at physical supply. Silver mining production is down significantly. Major silver mines are facing rising energy costs and lower ore grades. At the exact same time, industrial demand is at an all-time high. There's a massive physical deficit in the market. The paper market is fake. The physical market is real. When you sell your silver at $64, you're giving up an asset that hit $121 just months ago. Think about that. You are selling at a 50% discount to the all-time high. The media wants you to believe that high interest rates will destroy precious metals. They tell you that because gold pays no dividend, it cannot compete with government bonds. But they forget history. In the late 1970s, interest rates soared to nearly 20%, yet gold and silver experienced their biggest bull run in history. Why? Because inflation was out of control and people lost trust in the system. Today, we are seeing the exact same pattern. Trust in regional banks is shaking, government spending is out of control, and inflation is eating away at middle-class savings. Physical gold and silver are the only true shields against financial collapse. What we are witnessing on June 23rd is a final attempt to clear out weak hands. The algorithms are programmed to push the price down to psychological levels, like $62 for silver and $4,000 for gold, to see if retail investors will break. If you sell now, you are locks in your losses and hands your hard-earned wealth over to the very institutions that engineered the crash. History shows that the sharpest rallies always happen right after the most brutal sell-offs. This is the shakeout before the breakout. Here is your exact survival blueprint for the rest of today. Step 1. Turn off the live charts. Daily volatility is designed to break your emotions and force you into making bad decisions. Do not let short-term candles dictate your long-term wealth strategy. Step 2. Hold your physical metal. Never sell your physical silver or gold based on paper, price drops, or short-term panic. Physical metal in your hand has zero counterparty risk. Step 3. Watch the key support levels. If silver holds $62 through this weekly close, the rebound will be historic. Look at the volume indicators, not just the price line. Step 4. Use this opportunity if you have extra cash. If you are waiting for a dip to buy physical coins or bars, this manufactured trap is giving you a gift. Buy when there is blood in the streets. Don't let Wall Street win this game. Protect your hard-earned wealth. Make sure to subscribe to John Ag Briefing for daily, honest market breakdowns. We track the vaults, the banks, and the global charts, so you don't get caught off guard. Drop a comment below. Are you buying this dip, or are you waiting? What is your personal price target for silver this year? Let's get a discussion going. See you in the next briefing.